Hello everyone, welcome back to the RationalInvestor.com's daily brief recap. Here we are, it is Thursday, August 15th, halfway through this, the dog days of summer. Keep in mind that a lot of the professionals are not in the market right now. They're off on holiday in the Hamptons and stuff like that. So we do have to take a bit of grain of salt with what we are seeing in the market. We do have big options expiry coming up for the month of August here tomorrow. So we had a really good conversation today about options expiry and all the kind of nonsense that they do in the market in our daily brief today. In fact, we had the baby powder report, Julian's contribution to TRI daily briefs. Great report that he did today, and really feel like we're getting a nice broad perspective of different views on the market and different tools that you can use to help you frame trades and setups. This, of course, is our 10-minute summary, so you can see it's 10:34 here. Let's try and have this done by, say, 10 to the hour at latest, but would really like to try and get this around 10 minutes. So it's 10:35 now. Let's try and have this wrapped up by, say, around quarter to the hour. So, first and foremost, as always, we've talked lots about this recently, and I think it shouldn't be any surprise to anybody. We had this weekly potential empire potentially coming in on the US dollar index. Just absolute horrible econs coming out of Europe and Asia, and specifically China. Now it's kind of like one of these scenarios, whose poop stinks the least. And, well, I wouldn't say that the fundamentals right now are super bullish for any market in particular. I do believe that the Americans actually have a leg up on the rest of the world right now. So still looking for further uppy in the US dollar, and now we've actually gotten into this wick here on the candle basis. If we look at this from a daily basis, keep in mind this is a weekly chart. We said we'd see a fail and a breakdown in the US dollar if we lost this empire low. And you can see just coming right out of the gate first thing Monday morning, chung 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 chung, they've worked their way up here. Now, we've talked about this quite a bit with you guys, so there shouldn't be any news or anything to anybody. Wicks and tails like to be eaten. We also have these previous wick peaks up here, which are going to be resistance. And then, of course, if we go back to that daily chart, I love candle body highs as trade locations. So you can see that I think that they could actually work this US dollar index right up into this candle body high, into this wick, before we actually start seeing some serious resistance. So if we go back to the weekly chart, basically that's going to be right up in this wick. And of course, if we clothesline up here and we change this to a clothesline basis, you can see this is just going to be nothing more than higher highs and higher lows, which, as we all know, defines a bull market. So put it all together, still feeling bullish of the US dollar index, bearish of things like euro, and now even some of the commodity currencies we showed you recently, they just look like absolute train wrecks. So I'm not really calling any top on the US dollar index right now. I think also, too, that this speaks to sort of the fear in the marketplace. And moving on, we don't have the yen or the bonds on the chart this morning, but gold chart, really interesting levels we're coming into here. And I actually put a tweet out to this effect earlier. I guess it was last night I did this. So by all means, check out the Twitter feed for a really detailed analysis review of the gold market. You can see right now we're right up against previous market structure fail levels. This was a big level that, institutions will look back and go, gee whiz, if I could be short, this is exactly the level that I'd want to be short at. And gee whiz, here we are, right at that level. This is also, too, if we draw just a range off of this low back up to this high, you'll notice that, gee whiz, that's a 1.618. Golden ratio, that's an important level as well. And then lastly, you can also, well, not lastly, there's a couple other things here, but you can see we're at the midpoint of the 127.2 to 1.618 level, this 144.5. So, along with golden ratios, midpoints of these key fib extensions, the original market structure top, And then also too, if you notice in the profile, this is basically the muwak, or the valley in the profile that needs to be filled in. I'm thinking that I would actually like to see the market fill in this profile a little bit here. And so it doesn't surprise me to actually see some activity in here. If we look at the price action even just today, this is, we talked lots about this in the daily brief here today. This is actually, in my opinion, this looks very much like a diamond. We see this on Bitcoin quite a bit. This can both resolve bullishly and head higher, and it can also break down, head lower. And really, I don't think anybody has any business calling tops or bottoms in the market, especially on gold, until this diamond actually resolves itself. If we go back to the charts here that I put together for today's conversation, you can see how even today's price action, we're just sitting basically right at that 1.618 within about 10-15 bucks of it. And just look at this chart. Is there any way a guy like Brian can actually go in and buy this market here? There's no way in hell. Now, one thing that kind of disturbs me a little bit about the gold market right now, and actually I could crisp that up a little bit. There you are. One thing that bothers me a little bit about the gold market right now is I'm a big believer in that the stocks ultimately lead the commodity. Who's best to know what's the fate of a particular market than those people that are actually in the business? And so if we look at the actual gold and silver stock index, we see that yes, it's making higher highs and higher lows, but there's a bit of a problem here. Hopefully everybody can see this MACD histogram is actually painting a bearish divergence here. And as well, you can see we actually have a really pretty little head and shoulders pattern on the MACD study itself. So this needs to clean itself up. This needs to really resolve itself before I can really start thinking about being too long and too bullish of gold in earnest. Just from a pure technical perspective, everybody should look at this and go, gee whiz, there's some pretty big gaps. There's a big gap there. There's monstrous gaps there. There's a gap there. There's a lot of open holes in this chart and the study. And then if we do just simple fib analysis, you see that, gee whiz, the reload zone, 61.8, good old mountain man level, is that gap. And then this key low, which is what I think actually started off the rally, that was right on the key breakout through the head and shoulders on the gold chart. And pull up this tweet to see that level right there. Interestingly enough, that's actually where I could be a buyer, 38.2, top of value, original head and shoulders breakout level. As I just said a moment ago, off of those gold stocks, you can see that that was the pivot that sort of started this big honkin' rally here. So put it all together, a little concerned. I certainly can't be a buyer here. I sure hope that if you were long gold and gold stocks, you are taking some profits up here. And, with these divergences, at the very least, if you're a bull, you just got to simply cool your jets. Moving on, just took a quick boo at the stock market here with Julian this morning. Did some really interesting analysis. I mentioned this earlier about options expiry. Turns out that there is a heck of a lot of interest in the 2900 put option. That would be in sort of like that area right there. And keep in mind, tomorrow is options expiry. Could we see some sort of news out of political figures down in the States, tweets that might encourage a bit of a market rally into that options expiry? It wouldn't surprise me one bit. I'm not going to sugarcoat this. This chart looks very heavy now. And if we look at things like the Canadian banking sector, it looks really, really bad. But is this maybe a little too far, too fast? Maybe it's overdone. Tough to say right now. I mean, I certainly can't be a buyer just yet. And if we do get any kind of counter trend rallies into late August, early September, when the pros come back and they really want to hit this market, you can see there's a cheeky little gap right up here at this trend line just off of this M that I'd be targeting to try and get into this trade. So, put it all together. Not really a big fan of actually shorting stock right in here. I think this is a bit dangerous. With that huge options expiry tomorrow and the massive open interest in these 290 puts, and probably it would be better of us to actually look at the SPY. 290 happens to be up in this area here. I'd be really surprised if the market actually did close below there, but hey, anything can happen in this market. You never know. But interesting levels down here. Ironically enough, for like a trader's perspective, this isn't a terrible place to actually be thinking about hunting longs and just simply risking against these lows. It's a tough trade. I'm not going to say it's an easy trade. It's the end of the summer. It's not really a polite trade. You can see that they basically brought the market down, filled in some cheeky gaps off the lower time frames. You can see the big hole on the charts, which is interesting because that's right at that 290 level. And like I said earlier, I really don't mind like traders actually considering if you got things like divergence signals and maybe a nice W comes in here. I really don't mind the idea of hunting along here, looking for this gap to be filled in at some point in the not too distant future. With that options expiry tomorrow, of course, I think that there is incentive for them to get the market up top here, but maybe those options expire in the money because somebody really does want to actually get long stock. It'll be interesting to see what happens there for Wall Street tomorrow. So we had an interesting conversation about that in the daily brief today. Sort of finishing off, we'll take a quick boo at Bitcoin. We talked lots about this and even put tweets about to the effect of this. Just absolutely in love with my algo here. And what was really cool with Julian's baby powder report was all of his models were suggesting sell signals up in this area, RSI studies, all that kind of stuff. So, the fact that the algo did go uber bear here and set up this short trade, I think it makes just common sense. We often talk on the site, a good trade is a good trade is a good trade. So, was pleased to see overnight and into this morning, the 2-to-1 level on the algo setup did actually come in. So at worst, we would be selling part of the position and moving your stop to trailing. I do like the fact that you can see this inverted empire that's come in here. And interestingly enough, if we recapture this high, that is a short-term buy signal. It's not enough for the algo to start turning bullish. My hunch is what has to happen is we need to consolidate a bit more for algo to actually get bullish. But keep in mind, you're supposed to sell half of the position at the 2-to-1 and trail stop. So what that would mean is if this inverted empire did fire, then you'd be off on the remaining part of the trade, which I think makes perfect sense. Also, too, if we're looking for some sort of white knight, stock market rally, risk back on kind of trade, a move up here through Bitcoin, corresponding with some sort of rally back up top on the stocks, I think into options expiry tomorrow makes sense as well. The only other thing that'll leave you off with here today, we are doing some technical damage on things like sentiment and internal indicators. I happen to have on this is a great little tool that you can use to help you measure sentiment. It is the spread between the 3-month forward contract on OKCoin and the cash market on OKCoin. As the futures markets in Chicago and stuff get more robust, I might switch over to that as we go forward. But, really good, useful information here. This is a 6-hour chart. It basically, this fail here, what are you supposed to think if you see the market smiling at you? It's basically working its way lower highs and lower lows defines a bear market, yada, yada, yada. And here we are at the parity line. So, if all hell breaks loose and we lose parity and this thing continues to trend lower, my hunch is the correction in Bitcoin continues. So, a handy little tool you might want to throw on your dashboard as one of these sort of sentiment indicators to help you see the trends from a little different perspective. All right, why don't we leave it at that? That's about 10-12 minutes. Have yourselves a great day, everybody. All the best, and bye.